What's up everyone, it's Caddy with Money Vesting. So in this video, we are going to be talking about what is coming up for the upcoming week. Not only do we have some earnings, but the most important thing is going to be jobs. It is a labor week. So we're going to get the ADP non-farm payrolls, we're going to get the JOLTS reports, and we're going to get the actual non-farm payrolls report from the Bureau of Labor Statistics. So it is going to be quite an important week because last report, the unemployment rate did indeed tick up from 3.4 to 3.6%. So I'm going to walk you through my spreadsheet. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. If you're interested in joining us, it is the first week of the month. I did open up a few more spots for people, so today you can still take advantage of it. Link's going to be down below. So first things first, earnings season is winding down, but at the same time, it is quickly approaching. So this is the earnings calendar right now. Don't have a lot of companies that I'm particularly super interested in, so we're going to skip over this part. However, at the end of April, so towards the end of April, last week of April, you will find a lot of companies now starting to report. This is including all banks and big tech. Apple, Amazon, Google, Meta, they're all scheduled to release earnings towards the end of April and early May. So yes, earnings season for this week is winding down. We don't have a lot of companies, and for the next few weeks, it's going to be very muted, but we do have a lot of companies, especially S&P 500, big tech, big companies, once again, starting up with the earnings season very soon. It's going to literally go by very, very quickly. So we have to pay attention to that because the markets are very much forward looking. And now, up until the end of May and end of April and early May, we are going to see pre-earnings moves on a lot of individual stocks. So Monday, April 24th, we've got about 37 companies, and then it all ramps up to over 100 companies every single day reporting their earnings. So super important right now. The focus is not on earnings, but it will quickly get there as we approach towards the end of April. This right here is going to be the economics calendar. So we do have PMI manufacturing numbers, ISM manufacturing index numbers, and construction spending. Construction spending is one of the leading indicators for a potential recession because, as I showed you guys in my previous videos, construction spending is infrastructure spending. If that starts to drop, we will start to see construction layoffs happen in the labor market. And that is usually one of the first telltale signs of a weakening economy. So pay attention to that construction spending report at 10 a.m. Eastern on Monday. And then on Tuesday, we got the factory orders and, more importantly, the JOLTS. It's going to tell us a little bit more about the job openings. I'll go over the last print, and then I'll quickly go over my spreadsheet here in just a minute. So JOLTS, very, very important, coming out on Tuesday. Wednesday, we've got the ADP employment report. So ADP, being a private company, releases that report as well as the MBA mortgage applications. They have been ticking higher week over week because of the decrease in interest rates. So we'll continue to monitor how the strength is of the U.S. housing market and if there are people applying for mortgages or not. We've also got the ISM services index. And then on Thursday, we've got James Bullard talking. We got the Challenger job cut report, as well as jobless claims that actually do come out every single Thursday. And then this is the big day, Friday, April 7th. We've got the employment situation, which is going to come out at 8:30 a.m. Eastern, give us a little bit more insight into the unemployment rate, how many jobs we added in the month of March, and then of course, wages, average hourly earnings, participation rate, all that's going to be included, as well as the consumer credit comes out at 3 p.m. Eastern. So it is a big labor week. And if you go over to some of the estimates first, ADP employment consensus at 200,000. That's the number of jobs added. Unemployment situation consensus at 240,000. So last month, we actually added 311,000 jobs, and yet the unemployment rate still went up 3.6%, right? And the reason for that, and I've already mentioned this in one of my previous videos, the reason for why we can add more jobs every month and the unemployment rate can still go up is if there are more people entering the labor force through unemployment, right? In other words, you see all these big tech companies laying people off, right? All these job cuts all around, big companies and even small, medium companies are laying people off. That's creating a significant supply in the labor force, right? You're actually adding more people, participating people in the employment pool. And even though we're adding jobs, the rate at which we're adding people back to the labor force is far more than the amount of jobs that people are adding or companies are adding in the workforce. So it's a very simple math. And by the way, let's just quickly go over to JOLTS and I'll come back to this. The consensus is 3.6% right now. private payrolls at 215,000, manufacturing at 10,000, and participation rate staying steady at 62.5%. Right now, I think we're at 62.59 to be more precise, getting that one more decimal out, and then average hourly earnings to increase by 0.3%, and average hourly earnings to increase by 4.3%, and work week sitting at 34.5 hours. Consumer credit at $20 billion. That's a consensus, and JOLTS numbers sitting at 10.4 million. So we're seeing fewer job openings in the US. So 10.824 is the last number. So if we plug that consensus in to our own spreadsheet, 10.4, right now we're sitting at a 1.73 ratio, meaning that there is, for every one person unemployed, there are 1.73 job openings, right? So at one point, this ratio was at almost 2, right? Remember, Jerome Powell used to quote this number: for every one person unemployed, there's 2 vacancies. This number's come down to 1.73. So right now, again, this number will change. Unemployment number will change because of the employment report that we get on Friday. But 10.4 is the consensus for the JOLTS report. I'm going to bring that back to 10.82, and we'll plug that number in when it comes out. So going back over to this over here. Now, last time, in the month of February, we had 311,000 jobs. That's this number over here. And as a result, unemployment rate did tick up to over 3.6 million because we did have new entrants in the labor force at about 500,000. So if you're adding close to 500,000 people in the labor force and you're adding 311,000 jobs on a net basis, that is still a weakening labor market. That's why the unemployment rate went up. So in the upcoming labor report, if the consensus is 240 something thousand. So if you go back to that number, 240,000 is the consensus. Let's just plug that number in. So that's going to be 240. You'll notice that at first unemployment rate comes down. Actually, it goes up a little bit because we've got this new entrance. If you put that as 0, then yes, it comes down substantially, right? 3.3%. It comes down from 3.6 to 3.3%. But if we have new entrants in the labor force with all these layoffs happening, once again, increase. If we see that number at 0.4, 0.5, 0.6, million, in other words, that's going to be 600,000, 500,000, 400,000, whatever that number is. If that's, let's say it's at 0.3, then you'll notice that number is going to slightly come down. If that number is, once again, in 500,000, 600,000, it's going to stay steady. If that number actually goes up to, let's say, 0.6, or in other words, that's 600,000, then we can see the employment rate tick up to 3.7%. So it really, really depends on how many people are entering the labor force, because that increases the number of people that are looking for a job and at the same time are not able to find one. Right? And this new entrance in labor force right here, this can increase for multiple different reasons. Layoffs happening between companies, people coming out of retirement, caregivers, and there are different types of people, retirees, all those people, disabled people that wanna start working now. So there's a lot of different reasons why the actual new entrance in labor force can increase. And if it does, then of course the unemployment rate can also go higher, even though the economy is adding jobs. So we're going to reset this back to where we were. 3.6% is where we are at the moment, with a participating population sitting at 166.5 million and total unemployed persons sitting at just over 6 million people at the moment, and participation rate is going to be at just over 62.5%. You can actually also see this online. So if you come over to the actual websites, we're going to go over here, bls.gov. And all we need to do is come over to subjects. We're going to go over the national unemployment rate. This right here, read more. So it's going to bring you to the chart. And right now we are slight uptick from 3.4 to 3.6. You can see that uptick over here. And then, of course, we can go over to which industries we're seeing the most jobs, employment by industry. So you can hit go. And this tells you how many private payrolls we have. And again, the number one that we're waiting for is construction, because construction is a pretty good indicator. It precedes a sell-off in construction employment before the recession begins. So right now, construction employment is still going in very, very strong. So that's going to be the entire labor market report that we're going to be waiting for. Again, for the S&P 500 and the NASDAQ, it all really comes down to where we are with respect to our resistance levels. If you take a look at the S&P 500 right now, we are very much approaching our resistance at 41 to 4,200, right? This right here inside this red rectangle is going to be the level to watch, because we have gotten rejected at this level not once, not twice, but 3 times for the S&P 500. So it's going to be a very interesting week, and how the bulls and the bears kind of shake out. Where are we going to end up? But we are approaching a very interesting level for the S&P 500 inside this rectangle range between 41 and 4,200. And same thing is true for the NASDAQ. We are getting up to this level, sitting roughly around 12,280. We are already inside this red rectangle where we have gotten rejected not once, twice, but 3 times in the past. So both the S&P and the NASDAQ are approaching their respective resistance levels. And if you do get a breakout on the NASDAQ, the next target is going to be 13,200. That's going to result in maybe another 7.9, close to 8% upside. And if the S&P 500 can break out, then the next level really is going to be all the way up to as much as 4,300. That's going to be the next level to watch. Another 4.5, close to 5% upside for the S&P. So hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us. Big labor market week coming up. Let me know your thoughts down in the comment section below. As always, happy investing, and I'll see you all in the next video.